The problem of how to rein in inflation without choking off growth is not unique to the Bank of England, but some investors worry that the UK's dilemma is more acute than that faced by other big developed economies. According to the OECD on Wednesday, the 8th of May of June 2022, they forecast that growth of the UK economy will grind to a halt next year, with only sanctions hit Russia faring worse among G20 nations. So, in the light of all of this, investors are now betting against the sterling on dire threats of stagflation. So, investors are lining up bets that the pound will fall further after a tough start to 2022, as a dire mix of towering inflation and slowing growth darkened the UK economic outlook. Wagers that sterling will fall are near their highest level in almost 3 years, according to Commodities Futures Trading Commission, which track how speculative investors are positioned in futures contracts, a proxy for sentiment in the $6.6 trillion a day currency market. So obviously the Commodity Futures Trading Commission is in the US. So even as Boris Johnson survived a UK parliamentary confidence vote a few days ago, potentially averting a period of political turmoil, markets are focused on the gloomy economic backdrop. Analysts said, meaning that the Prime Minister's victory is unlikely to prompt a change in course for the currency at the moment. Sterling whipped back and forth around that vote on Monday, the 6th of June. Okay, so currency traders said that the implication of Johnson's win were muddied by uncertainty over who might replace him. At the same time, the political twists and turns largely remains a sideshow for a foreign exchange market focused on the potential for UK recession later this year, which could hit the Bank of England's effort to tame inflation by raising interest rates. So the market is very bearish on sterling, according to Sam Linton-Brown, and head of developed market strategy at BNP Paribas. The domestic political uncertainty hasn't been a big driver of the currency, he added. So even if it alleviates, you shouldn't expect the pound to recover. We still think it can weaken further, according to him. The Bank of England has lifted interest rates 4 times since it began tightening monetary policy in December of last year, 2021, well ahead of its counterparts such as the Fed, US Federal Reserve, and the ECB. Even so, the pound has lost ground against the euro and the dollar this year, as investors begin to wonder how long borrowing costs can continue to rise, with consumers facing an acute cost of living crisis. So with this tightening that the Bank of England has implemented, some experts are saying that what it actually means is that they're actually taking money off the people, amongst the people. It's taking money out of the hands of people who are paying their mortgages, because they are saying that the mortgage rates in the UK is somewhat of the short-term nature, and amongst other things, and also including the Brexit issue. So they're saying, amongst other things, according to Linton-Brown, said stubbornly high inflation would hit foreign demand for UK government debt, which trades at some of the lowest inflation adjusted yields in the world. Without persistent inflows into gilts to fund the UK's current account deficit, okay, which as it concerns trade, somewhat related to trade as well, the exchange rate will have to adjust lower, he said. For some analysts, the gloom surrounding sterling could actually be a source of resilience in the short term. A global rebound in stock markets would likely be a boost for the pound, which it well, is that going to happen? No, we're not exactly sure that whether that's going to happen. There's a good chance that the rebound is not on the cards anytime very soon in the global stock markets. So the pound tends to move in tandem with risky assets as bearish investors exit their short positions, according to Nomura strategist Jordan Rochester. Investors might also embrace a renewed threat to Johnson's position, betting that his successor will be less likely to inflame trade tensions with the EU by ditching the post Brexit trade deal for Northern Ireland. The market has become so negative on politics in the UK that it tends to lean towards the positive if there's any promise of change, according to Rochester. But you have to be careful because we don't know what a change of leadership means for policy, for spending, or for reform, because we don't know who comes next if you want to remove Boris Johnson. So yes, investors are betting against the sterling, and traders question how far the Bank of England can raise rates in the face of the UK's cost of living crisis. Yes, that's what's going on. So see what you make of all of these things, and thank you very much for watching this video.